Let's get some trader talk now from KNUCKMAN, the Chief Market Strategist for St. Paul Research. Hello to you, Alan.
Hello, Angie. Sometimes it seems slow as we're in the summer, but stocks have had a tech takeoff. We're seeing another comeback climb that has a target another 10% higher.
What's going on with your current trades, Alan?
All right, let's talk about our current plays. June plays. Good news, suffering stocks have finally been put on the move. So we've got Uber $10 off its lows, and we've got Verizon holding the gains, but SunPower is still cloudy. July plays. Snap, again, a $10 snap back. So we're back to unchanged there. So the TME stock still has some bottoming here. We'll see if it can get a boost. And X has stalled for now, but again, we took 50% profit when the getting was good. That leaves us with August plays. In HPE and Intel, those have been steady, holding their strength, waiting for another move.
Tell us about the details of your WPI trade this week in Twitter.
All right, let's talk today's trade trigger. It's Twitter time again. Now, this stock is 30% off its February highs. If you remember, we'd exited at the end of January and took a quick 2-week 100% gain, and then we've seen this stock stumble. So right now it's stuck between $50 and $80 for the last 4 months. It's got super support at 50 that we're leaning on. And let's remember that this stock is up 170% since its March low. So it is a momentum mover, and now it's built a base once again. All right, the play here is a July 50 call. Again, that's super support at 50. We're buying a little bit less time than we do because we're buying a higher delta, so it's going to give her a better payoff on the upside. The important thing here is there's a gap at 65 that the market looks to fill. Now, 65 is also the midpoint of this 50 to 85 range, and markets often come back to their midpoint area.
As you are gauging the market action, Alan, what are your trading day takeaways?
All right, trading takeaway number 1, and it's 1.5 actually. If we're talking about the 10-year yield, and right now it's at the bottom of the range between 1.5% and 1.75%. So if it can break through that 1.5%, again, it's been in this range for 3 full months, then we're going to see a big breakdown, which is bullish for stocks. Number 2, go gold. A $200 move in 2 months when nobody was looking, back to the 1900 level. So this is the midpoint. We've talked about how important midpoints are to see how it pushes through or it holds that resistance. It's the midpoint of this drop from the 2020 top of 2100. So that's a very positive sign. And number 3, $25 from top. So like I said, stocks seem slow right now. The S&P high yesterday was just $25 from the all-time forever tip top in May. Now that movement to the downside was 180 points. So a V recovery targets 4,400. And also, if you look at the big picture, and I'm a technical guy, the 4,000 to 4,200 range that we've been in April and May, a breakout again about 4,200, again, targets 4,400. So a lot of bullish signs. Let's see if we can get a boost.
Thank you for your Trader Talk, Al. For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.